What's going on, guys? Welcome back to the channel. Today we're doing an analysis on Apple. Now, at the time of recording this video, they're going to be doing their press conference tomorrow. So what I wanted to do, folks, was take a look at this stock from a fundamental perspective, loading this up in the stock research tool, because here's what's going to happen, folks. They're going to do their press conference and there's going to be a lot of price volatility. So what I want to do is find the intrinsic value of this business. So that way we have at least a guidepost to figure out if this company price goes down or up, we know where we should be standing. So with Apple, I have this loaded in my stock research tool, and I have three different categories here. I have the company metrics category, which compares the 5-year averages to the trailing 12 months. Financial evaluations category, which takes a look at the balance sheets, their income statements and cash flow statements, and gives it a score out of 10. And finally, last but not least, our price analysis section, which we will find the intrinsic value of Apple. So with Apple, looking at the company metrics, I'm looking for any discrepancies from our trailing 12 months to our 5-year averages. So right off the top, I'm seeing some consistencies with our PE ratios being at this 25 mark in their trailing 12 months, and our 5-year averages being at 23.49. Not bad. Not bad considering our revenue has been going up over the last 5 years, and I'll show you why. Our EPS is going up. So right off the top, PE ratios have been consistent, and we're getting an increased EPS. So that's phenomenal if you're holding on to this business. ROE is also up in the last 5 years compared to our 5-year averages. That is incredible. Wow, that's a huge jump. 152 compared to 78, guys. Take a look at that. Profit margin has been pretty consistent, which is healthy to see. I like a company that has been consistent profit margins. First 4 categories looking pretty good. Now, jumping into the bottom here, something I like to compare is our 5-year average free cash flow to our trailing 12 months. $107.58 billion, folks, in our free cash flow compared to our 5-year average of $68 billion. Look at the jump there, guys. Look at that jump there. $40 billion more than what we currently have. And our dividends being paid out is $14.5 billion. So that chunk there at $14.5 billion is easily covered by our $68 billion on average, and doesn't make a dent in our free cash flow in our trailing 12 months. Obviously, that is subject to change, but it's great to see an improvement nonetheless. Now, our return on invested capital, way higher than our 5-year average. 57 compared to 31. These are astronomically high numbers, folks. Like, I'm looking for 10% or higher, and I'm getting 57 and 31. This is a company that knows how to make money. This is the top dog, and for good reason. Piotrowski score is sitting at 8, and the 9 is the highest score we could possibly achieve, and 8 is an incredibly good score. And that just means that over the last year, have they made improvement on their assets and reducing their liabilities? And Apple has been doing that. They've been doing a phenomenal job on that, as well as their Allman Z-score sitting above this 3 range. We have an Allman Z-score of 6.78. We want this score above 3. 3 or higher. 3 would indicate a safe company. Apple is sitting at 6.78. That's double than what we want. Listen, it's evident of why Warren Buffett loves this business, and it occupies 40% of his portfolio. They are knocking things out of the park left, right, and center. Now, just to divert your attention, we're going to jump into the financial evaluations category and take a look at this, guys. So we've been knocking out of the park in our company metrics, and with our financial evaluations, we are grading this company a 7 out of 10, a pretty solid score. Now, the only things that Apple is doing wrong is their PE ratio is not below 22.5. It's currently sitting at 23.49 on average. Not a huge deal in my opinion. Current ratio is sitting below 1.5. I don't like this, sitting at 0.86, as well as our debt to equity is extremely high. So that is a warning, a little bit of a warning flag, because that's a red flag for me, because that means they've been upping their financial leverage through debt and not through equity, where we want to see the opposite. We want to see equity being built within the company, not taking on debt. Current ratio, same thing. They have a lot of debt. They have a lot of liabilities compared to the assets that they own. So in case of a need to liquidate those assets, they won't be able to cover those liabilities. So that's something to keep in mind. However, take a look at this. If we can get around these 3 X's, There's a lot of green across the board. Our ROE is jumping up. Our EPS is jumping up as we expressed. We are buying back shares by 3.75%. That is incredible. Our net income is going up. Our free cash flow is going up. Our revenue growth is going up. The trifecta of those three things, the three core things of a business have gone up, as well as a return on invested capital being as high as it is at 31%. This is a phenomenal business. Does that mean you should go out and buy Apple? Well, no, there's still some more work to be done, but you can use my software here and just stop here and say, well, look, it's scoring 7 out of 10. I can live with these mishaps. I can live with these minor errors, because look, 7 out of 10, that's pretty solid. If they could just justify this PE ratio that they've had, I can get behind this, no problem. Now, that being said, we're going to jump into the price analysis section here. And what I'm going to do here, I'm going to do 3 different assumptions to figure out what we should be paying for Apple today. Our current price is $154.53. I'm going to fill out these boxes here, folks, and we'll talk about it in just a quick second. So folks, before we jump into the last section of the video, if you're enjoying the content so far, hit that like button, hit the subscribe button. This software here is coming out extremely soon. I'm loading this up on my own personal website, so take a look. It will be available to you, my viewers and subscribers, and you'll love it. So take a look at this, guys. We're going to load this up. The price analysis section here, I've done what I usually do, and if you're new to the channel, I like doing conservative numbers on my revenue growth because I'm doing a 10-year analysis. I have to assume, because it's a $2.5 trillion company, it's going to grow slow. However, apart from that, I kept the numbers pretty consistent with our profit margin and our free cash flow margin, because they've been able to show that they've been able to keep those numbers consistent with our profit margin. Our free cash flow margin, I've decided to just mirror our profit margin and keep it consistent, because to me that just makes the most amount of sense. As well as our price to free cash flow and PE ratio, I kept it below the 20 mark, because we're currently sitting at 23.22 for our price to free cash flow and 25.07 for our PE ratio. Hit the calculate button for the desired return of 13% across the board. We're going to figure out what we should be paying for this company today. So folks, the current price that it comes out to be is $106.97. 106.22 on the moderate side, 129 on the aggressive side. And look, you may disagree with my revenue growth numbers being 5, 6, and 7. That may be too low. But hear me out, folks. At a $2.5 trillion company, how fast do you think they can grow? How fast do you think that this company can actually build? It's already hit, I think, probably past its, not past its peak, but there's still room for this company to grow, but not as quickly. Yes, they're making more. They want to make more Apple products. They want to improve upon the iPhone and the ecosystem that currently exists. They want to make, let's say, an Apple car. There's a lot of things that are in the what ifs, right? But as this new iPhone comes out, is it going to still retain the current audience? We're seeing a lot of people do the shift. It's still obviously probably the most #1 popular phone in the United States, in North America. However, is it the best bang for your buck? I know Apple fanboys, and they are loyal to their products. However, will there be a chink in the chain? I don't know. But as it currently stands, folks, $106.97 is the price that we're looking at for an average calculation. To be honest, I think it's somewhere between our moderate and aggressive. I may be too conservative with this 5% revenue growth number. It may be somewhere in here. Now, do I think that this number today is going to drop to this price anytime soon? Possibly not, but who knows how this press interview goes. If you're watching this video after the press interview happens, or the press conference, and the price goes down, you know what? You're getting it for a decent bargain, because this is a phenomenal business. But those are my thoughts, folks. If you enjoyed this video and you want to see a company evaluated, hit the like button, hit the subscribe button, and comment down below. As well as stay tuned. This software is coming out, and you can do all this, and you won't have to wait for me. And there's more features along the way. We're getting the income statements, the balance sheets, the cash flow statements, as well as we have charts available to you. So if you want to see everything visually, from let's say shares outstanding, total assets versus liabilities, who are the top institutional holders, and the performance against SPY, and so on and so forth, We have all that available, and more things are coming. Anyways, guys, that is the video. I appreciate you so much for this love and support, and I'll see you in the next one. Thank you so much for watching.